Want to invest like Warren Buffett? Well, what's he doing right now? You might be surprised, something he's never done before. I've got that and more coming up. My name's Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. No question that the Oracle of Omaha, Warren Buffett, is the most successful investor of our generation, past 100 years or so. Big student, obviously, most famous student of Benjamin Graham, value investor. And I don't know if you've ever made it out to a Berkshire Hathaway shareholder meeting. I went once. That's just sort of one of the places that Warren Buffett speaks. So what's he saying now? Well, he's saying all the same stuff, the normal things, but it's his actions that are possibly speaking louder than his words, and it's the inaction that is actually speaking louder than his words. See, Warren Buffett has been, he is an enormous advocate for both America, but also long-term investing. He is a believer in the stock market, and at some of the most trying times, he talks about and is kind of bragged about his brazen philosophy that the stock market will prevail and overcome this. I remember vividly in 2008, during just the worst of it, where Warren was basically interviewed as frequently as possible saying, I'm buying stocks right now. I am buying stocks. I'm excited to buy stocks right now. And that goes back to one of his more famous quotes, when there's blood in the street, buy real estate. I think that's Warren Buffett that said that. He's got so many quotes, but he's a believer in equities, owning stocks. And that's why on an ongoing basis, he's consistently buying. And he's diversified, I think, in the portfolio that Berkshire Hathaway owns. Many of them are publicly traded companies, but he owns some private companies as well, like Geico and a few even in our neck of the woods here in northern Indiana. But he says he's fairly concentrated. When he likes a stock, when it's a good value to him, he is aggressive and buys a lot of it. So all that to say, he isn't someone that has a tendency to sit on a lot of cash. He's putting that cash to work. Well, take a look at this. In each of the past 5 quarters, starting late 2022, which is interesting because you would say that was the bottom as we know it right now. That was the bottom, October of 2022. That was the year to date. The stock market was down about 26%, and it hasn't been smooth sailing, but it's been a fantastic ride in return since then. But since that point, October 1st of 2022, they have been a net seller of equities. So he's still buying some companies, but he's selling others. So buying stocks, but their portfolio, they're also trimming some holdings in other areas. And they've actually been, when you level all that out, when you even it all out, they've been a net seller of stocks to the tune of $39 billion. So a small percentage of the total portfolio, but a net seller nonetheless. And then when you include cash from operations, profits, they also haven't been deploying that very quickly as well. They're now sitting, Berkshire Hathaway is now sitting on almost $170 billion of cash. That's more cash than they've ever held in their history. So there again, seems like his actions are speaking a little bit louder than his words right now, because this would suggest a more cautious tone. Also, the Berkshire Hathaway only owns one of the Magnificent Seven stocks that have done so well, and only owns one, and that's Apple. And I think he's been trimming his position some there. So what does all of this mean? Well, Warren Buffett is a value investor. Now, if you're familiar with style boxes or whatever, you might know that value is sort of a category. It's a section of the overall stock market, whether it's large, mid, small, or you can look internationally as well. But value investments are its own group of sectors. Well, no, Warren actually looks and it's like, okay, so if I were to look at this company, I would think that its true value is this. Where is it trading at? Again, Benjamin Graham, Warren Buffett, learned from him. talked about Mr. Market. Is Mr. Market very optimistic and he's asking for a really high price for a company that's worth this? Or is Mr. Market very pessimistic and is asking for a very low price, even though the fair price is this? And so Warren Buffett has a certain approach, long-standing names, great management team, but has an eye for companies that he can buy where he believes the value is here, and yet he can buy it here in the open market. So I think what this is really saying is they're not finding a lot of deals out there. They're not finding a lot of deals. Said differently, the stock market, due to a variety of measures, or that you can see through a variety of measures, appears a little expensive. We've talked about that before recently. That price to earnings ratio, I look at the forward price to earnings ratio, that is back, that is one standard deviation, geek speak, above the long-term average, meaning we've sort of surpassed the, I think it's about fair value, average price, into the market looks a little expensive, overvalued right now. Take a look at this, the Shiller PE ratio as well. This adjusts that PE ratio, but for inflation, sort of smooths out some abnormalities. And yes, the overall trend over the past 30 years or so is that prices have been going higher. The Wall Street has been bidding up prices. And so we'll see if that is if we're on a new plateau or a new trend with that. Yet even with those higher prices of the past 30 years, we are at a high valuation in that Shiller PE as well. So when the oracle speaks, you listen. Whether he's saying it with his words or saying it with his actions, he's a little bit cautious right now. So what do you do? What do you do with this information? Is Warren Buffett bracing for a crash? No, he's not. In fact, I actually think there's three very clear things that we could take from Warren Buffett's example right now and apply it in our own financial life. And one I've been talking about, and that is it appears as though Warren Buffett's team is just a little bit more cautious right now, either because they're expecting prices to get more attractive, or they just can't find a great value right now. They do have, number one, they do have a little bit more cautious stance at the moment. Something that, as the valuation metrics are showing, hey, stocks could be expensive, something I think would be appropriate for us all to have. Just a little bit more caution after all of this optimism over the past 5 months for sure, but since the bottom in 22. That's one. But two, he's doing that in the midst of being committed to his long-term investment portfolio. He's not mass selling. It's not that he's, stockpiling, just selling as much as he possibly can, bracing himself for this big correction. No, he is sticking long-term to that long-term investment strategy, not abandoning his long-term investment strategy, even if he is taking a little bit more of a cautious stance right now. So two, sticking to that long-term investment approach. And then three, I think this is worth noting as well, also something that we could implement, and that is he's not buying into the hysteria of the Mag 7, right? Or feeling pressure to try to keep up with that, or make sure he's not outperformed because of the high flyers in that Mag 7 Nvidia, that sort of thing. And so if you hold it, and we own indexes, a lot of indexes, in addition to multiple portfolios or multiple strategies, then you're going to own some of that, but not getting too caught up in, the Mag 7's done this, or is Tesla still even in the Mag 7, and not getting caught up in all that hysteria, sticking to that long-term strategy. That's the third thing he's doing. We could take a page out of his book. Work with your certified financial planner on that. Ensure that you have a prudent long-term investment approach and investment strategy. We believe in multiple strategies for better diversification. Make sure that you've got that long-term approach that's connected to your financial plan and what you need those investments to do for you. Then tune into that with your certified financial planner, making sure you're not getting ahead of your skis or taking too much risk at a time when, I hope the market grows into it. I hope the economy grows into it, but it looks as though many valuation metrics are showing stocks are a little expensive right now. Maybe temper a little bit of that optimism as well. So work with your certified financial planner on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K, wisemoneyshow.com. You can find us there as well. Or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.